Warren Buffett has said more than once that his secretary pays a higher tax rate than he does. One of the richest men alive tax less than the person who answers his phone. That's not a typo, and it's not a one off. A leaked IRS analysis found some of the richest people in America paid a true tax rate of under 3%. The average American worker pays somewhere around 15 to 25%. So, how does the richest person in the room end up with the smallest tax bill? It's not because of some hidden loophole nobody can find. It's because the tax code was never built to tax wealth like theirs in the first place. This isn't tax evasion. Evasion is illegal. This is something entirely different, and it's completely legal. Here's how taxes work for almost everyone watching this. You earn a paycheck. Before it even hits your bank account, taxes are withheld. Income tax, payroll tax, all of it, automatic. You never see that money. You never get a choice. Here's the part that matters. Your income is a wage, a number that arrives every 2 weeks or so. And the IRS taxes wages the moment you earn them. That's the entire system working exactly as designed for people who get paid in paychecks. But billionaires don't get paid in paychecks. Billionaires get paid in something the tax code barely touches: stock. Here's the trick, and it isn't even hidden. When a founder's company's stock goes up in value, that's not income. It's an unrealized gain, money you'd have on paper if you sold. And the US only taxes gains when they're realized, when you actually sell. So, if you never sell, you never owe a dollar of tax on it, ever. A billionaire's net worth can grow by $10 billion in a single year, and their taxable income for that year can be close to zero. Because, on paper, officially, they made nothing. Elon Musk, Jeff Bezos, Mark Zuckerberg, their wealth is almost entirely in unsold stock. It's not sitting in a bank account. It isn't money the way your paycheck is money. So the obvious question is, if you never sell your stock, how do you actually live? The answer is a strategy with a blunt nickname: buy, borrow, die. Step 1, buy. Buy assets, usually stock in your own company, and hold them. Let them grow for years, completely tax-free, because you never sell. Step 2, borrow. Banks will happily lend against stock you own, using it as collateral. You take out a loan, sometimes hundreds of millions of dollars. Loans are not income. The IRS does not tax money you borrow. So you get cash to spend, houses, yachts, anything, without selling a single share, and without ever triggering a taxable event. The interest rate on the loan is often lower than the tax rate you'd pay if you sold instead. So it isn't just legal, it's cheaper. Meanwhile, your stock keeps growing in the background. You just took out a loan against an even bigger pile of wealth. Rinse and repeat, year after year for an entire lifetime. You can live like a billionaire and report almost no taxable income at all. That's step 2. Now here's step 3, the one that erases everything. Step 3, die. I know, morbid. Eventually, the stock has to change hands. It gets inherited. And here's the rule that makes the whole strategy work: stepped up basis. When you inherit stock, your cost basis resets to its value on the day you inherited it. Not the day it was originally purchased, the day it was inherited. Which means all the gains that built up over an entire lifetime simply vanish. For tax purposes, they never happen. The heirs can sell that stock and pay tax on zero growth, even if it had previously grown by billions. The original owner never sold, so never paid gains tax. The heirs inherit at the new value, so they never pay it either. Nobody ever does. There's another tool billionaires use, and it looks generous on the surface: charity. Donate appreciated stock to your own charitable foundation, and you get an immediate tax deduction for the full current value of the stock, even though you never paid tax on the gain. And you can still control that money through the foundation you created. A donor-advised fund can hold that money for years or decades before a dollar reaches a real charity. Meanwhile, the deduction already reached your tax bill the year you gave it. Some of the biggest tax breaks in the code look like generosity, and some of it absolutely is, but it's also one of the most efficient tax reduction tools available, timed for maximum benefit. Legal, documented, built into the code on purpose. Then there's a loophole with its own name: carried interest. Private equity and hedge fund managers get paid a share of the profits they generate for clients. For almost anyone else, that would be a salary, taxed as ordinary income. But the tax code classifies it as a capital gain instead. Capital gains are taxed at a lower rate than wages. So fund managers earning hundreds of millions a year can pay a lower tax rate than a school teacher. Congress has tried to close this loophole for over a decade. It's still open. Then there are offshore accounts and trusts, move assets into structures set up in low tax jurisdictions. Complex trusts can shift where and whether wealth is ever taxed at all. None of this requires hiding cash in a suitcase. It requires lawyers, accountants, and a tax code with thousands of pages of exceptions. The wealthier you are, the more of these exceptions you can afford to use. That's the real advantage, not secrecy, access. Access to strategies most people have never even heard of. So why doesn't anyone just fix this? Every one of these strategies exists because Congress wrote it into the tax code. Some rules go back decades. Some were added recently after intense lobbying. The tax code isn't broken by accident. It's the result of thousands of small decisions, each one lobbied for by someone with a lot to gain. Proposals to tax unrealized gains, close carried interest, or reform the estate tax come up almost every year. They rarely pass. The people most affected have enormous influence over the process that would change it. This is not a conspiracy, it's just how influence works in plain sight. You, meanwhile, pay tax the moment you're paid. No delay, no loophole, no stepped up basis on your paycheck. The system taxes wages hard and taxes wealth barely at all. The way you make money is taxed completely different than the way billionaires make money. Same country, same tax code, two entirely different games. None of this is illegal. That's what makes it so effective. The tax code rewards owning assets and punishes earning a paycheck. It always has. Drawing interest, how money and business actually work.